It's time to bring in Diane King Hall, host of Morning Movers, because we have some action happening and we want to get all the details from Diane. We're looking at Meta this morning. Good morning.
Good morning. It is good to see you. Happy to have you back, Nicole.
Thank you.
I enjoyed your pictures from your vacation. All right, so let's talk about Meta. Meta is making a big investment in smart glasses. This kind of obviously lines up with all the investments it's been making with AI, all the talent it's been hiring. It's making a $3.5 billion investment for a small stake in Luxottica. That's the world's biggest eyewear maker. It's the parent of Ray-Ban. Shares of that company moving higher on the news. Shares of Meta also moving higher today. Shares of Meta up about 1%, so extending that advance. You were just talking about Nvidia. Meta's been an outperformer within the Mag 7. It's been really Meta, Microsoft, and Nvidia, the leaders within that group. With this deal, it gives Meta just shy of 3% ownership. They have potential plans to increase that stake over time, but it would increase just to still single-digit percentage, 5% potentially over time. It strengthens, obviously, its commitment by Meta in AI to those AI-powered smart glasses. It's an emerging category in the wearable space we've been watching. I know we see Mark Zuckerberg wearing glasses, those kind of glasses all the time. They're investing directly in that partner. That shows they want deeper access to global distribution and manufacturing, just know-how, the knowledge of how the manufacturing process works. That's crucial, especially when we think about scaling smart glasses, you know, with more and more people who may want to tap into this, not just glasses wearers, but people who want that accessibility of smart glasses. It underscores his long-term vision for AI and spatial computing as well, especially as they work to kind of blend that experience with the augmented reality experience. That could help them close the gap with competitors like an Apple and any other competitors who are trying, or any other companies that are trying to get into that space and build just a stronger ecosystem in that. As far as stock reaction, we just talked about that. Shares moving higher of both companies. And it's interesting to see that because a lot of times when you see a company spending money, it gets dinged. Not today.
Okay, you know, the ticker symbol for that, the other company, the owner of Ray-Ban and Oakley, is ESLOY, you know, Exotica, whatever it is, Luxottica. So I've been following this stock forever because of one person, and that is Ted Weisberg.
Oh, Ted Weisberg.
He loves ESLOY. And you know what? He's been talking about it since the beginning of time. It went from $103 to $155. It just has done. It's been an incredible mover.
Yes.
So, you know, you got to keep an eye. I mean, it used to be $66 in the last 3 years. So you can see how these smaller companies, they have something good.
Yeah, just pop out of, well, seemingly out of nowhere, but it shows they have a backing of a huge company behind it. Meta clearly believing in this company, and so you're seeing the shares of Luxottica rally on this news. Oh, and by the way, I can't leave this out in terms of analysts and how they're looking at Meta. TD Cowen raising its price target on Meta. They've moved it all the way up to $800, so they see more upside from here ahead of earnings. The strength they see in terms of drivers here, both AI, the AI initiatives. We know that Meta's been making a big investment in AI, and the ad space. They think that they expect that to grow. They're expecting revenue to be up 16% year over year for Meta. They're expecting revenue of more than $45 billion. They're expecting EPS to come in at 608, which would be consensus. Consensus is looking for 582. So again, it's all about strong digital ad performance. So some of Meta's core business they see as a core feature, still in a tailwind for the company. Of course, the AI investment ramp up, the investment they've made in that acquisition of Scale AI, and they're expecting that to support further monetization within the company, especially in engagement in ads.
And as we talk about this, I mean, they already had the partnership because you were able to use the Ray-Bans for things. It became like a Christmas present. So they already had a partnership working together, and they've now made this stake, as you noted, 3%. And then they said they could go to 5%.
Yep.
So we should, I'm glad Diane brought us this because we got to keep an eye on this. They may up that stake from 3% to 5%. It really shows that confidence in that company. Let's get to Merck and Verona.
some deal news there. Yeah, not even a merger Monday here, but you've got some deal news in the pharma space. Merck making a $10 billion bet on Verona Pharma. It's the largest deal in decades. That's according to some Bloomberg data. It's looking to plug that revenue gap that's expected to happen when it's a blockbuster selling drug, Keytruda, goes off patent. So there's potentially a fiscal cliff there. That cancer drug, that pulled in almost $30 billion last year. That's nearly half of Merck's total revenue. So they've got to plug that hole. That patent expires in 2028. So that puts about $18 billion in sales at risk or future risk. Now, Verona recently launched a treatment for COPD. And so COPD hasn't had a lot of innovation in years, actually, in over 20 years to be exact. So there is sales potential that's seen from that treatment. And analysts are seeing peak sales potential up to $4 billion. While it's not the same amount, obviously, as what Keytruda brings in, it is meaningful and helps to offset some of the potential patent and fiscal cliff that could happen by the patent expiration of that cancer drug for Merck. So you're seeing shares of Merck actually move higher on this news. Once again, even though they are the acquirer in this instance, shares of Merck up more than 3% right now, Nicole.
Okay, and of course, we're waiting on more tariffs on pharma. And
yes.
There may be something in the industry that we need to talk about in the next few days, too. So we'll see if anything comes up with that. So you have that agreement there. Mm-hmm. How about we take a look at T-Mobile, TMUS, with a downgrade, right?
Yeah, it is. It was interesting. I was wondering if T-Mobile was going to be able to shake this off today, Nicole. But so far, that doesn't seem to be the case. The stock is being dinged off the back of this downgrade by Keybanc. They're downgrading T-Mobile to underweight from sector weight. They're citing strategic and competitive concerns. They also have a new price target of $200. That signals downside from here because what are we at? $232 right now on T-Mobile. They think one of the things that they aren't in love with is just the fiber build out, fiber infrastructure for T-Mobile. They think they are more limited compared to, say, AT&T, Verizon, and even Comcast and Charter because they're expanding their own fiber coverage. So they think they're behind on the build out. T-Mobile's aiming to reach 15 million fiber homes by 2030. But to put that in perspective, AT&T is targeting 60 million homes. Verizon is targeting 40 million homes. Comcast and Charter collectively, they're targeting some 120 million homes. So they're saying, look, that number for T-Mobile is not enough. And then when you think about not just the fiber connectivity, because that's also about bundling, right? More and more households and consumers are bundling their services, whether they're talking about internet, phone, etc. So the other issue is the value proposition for Keybanc. They think, the value proposition is not the same for T-Mobile because one of the things that had been a tailwind for T-Mobile where they were winning out on subscribers is their price, right? Their price was beating Verizon, their price was beating AT&T, and they had this whole pricing war that started the end of last year that continued through this year. Now, to be fair, shares of T-Mobile have been, well, now they're running like essentially neck and neck with the S&P 500. They had been an outperformer last year, but they've lost some ground. They still are higher for the year, but they are underperforming Verizon, and AT&T's been the outperformer.
It was funny because when 5G came on, everybody was all about T-Mobile. Mm-hmm. And when we interviewed the head of investor relations at AT&T, they just talked about investment in fiber. And now you're telling me here that this analyst is talking that T-Mobile is sort of falling behind. They appear to be fiber deficient against the other carriers. So that has come sort of full circle. It's really interesting. Also, Nvidia crosses $4 trillion. We're at new highs there. A final thought on any of these or any of the day?
Well, I think that's exciting news to hear. I mean, it just shows that, it's still game on when it comes to the Mag 7. I mean, I know there's been some bifurcation, and we started the segment talking about Meta. Meta has still been an outperformer there, but you can see how much strength is behind Nvidia and just the focus on AI and how important the AI ecosystem is and the leaders there. So we're going to continue to have this conversation about Nvidia, about Meta, and who maintains this leadership pole position within AI, Nicole.
All right. Diane King Hall, great to see you. And folks, I'm sure you're feeling pretty good that you're Nvidia. You probably have Nvidia somewhere. It's sort of almost hard not to have have if you own the major averages in your portfolio somewhere. So Nvidia, 4 trillion, new record highs for Nvidia today.